What is up, guys, and welcome to another edition of the Market Marauder Show. Beating the market one trade at a time. Hope everybody's having a great week out there, able to lock in some profits. All right, so I'm going to be going over some market news as well as my Sunday stock watch list. So these are going to be some of the plays that I'm watching for next week coming up. Bear in mind, it's going to be a short market. We do have Juneteenth coming up. So the market will be closed next Wednesday, so just bear that in mind. So the first stock on here we have is KR, which is Kroger. They have earnings that is going to be on next Thursday. Ticker sign KR. They are currently at $50.59 per share. They are bearish. Moving average 10 is at $50.38. Moving average 20 is at $50.41, and moving average 30 is at $50.43. So them being at 59 makes them a little bit bearish in my opinion, only for the simple fact that 50.49 was kind of the high, and they jumped back up. But in my opinion, I'm still waiting on some of the moves from their potential earnings. So with the interest rate numbers that came out for food and energy, food was still pretty high as far as inflation is concerned. And I'm really wanting to see what the numbers are for Kroger to see if they have been able to tackle inflation. I know other stores like fast food chains like McDonald's as well as Walgreens have been lowering prices or cutting back. I want to see Kroger's plan to help fight inflation overall, so I'm going to be keeping a close eye on them, seeing if they can hit 55, if they can break through 55 before their earnings, with it being a short week. Then I can say, okay, they'll be bullish. But at the current time, I want to say they're still bearish at their current price of 50.59. So the next one on here, I want to talk about is SPY, which is the S&P 500. They had a bullish upward trend towards the end of market, but overall, I would say definitely some uncertainty going on in SPY with all of the things going on in the news, all the geopolitical things going on overall in the entire market. Going to be looking at SPY to see how the market is performing as a whole. SPY ended at $542.81, being bullish. But before filming this, I looked at the futures, and they were a little bit bearish. So maybe some fall off or some selling going on as the market opens up tomorrow. So one of the news articles that I saw that I thought was very interesting is the Saudi Arabia deal that had just closed. So, the established financial world order of the past 50 years is now transitioning to a new and unknown paradigm as the petrodollar agreement between the U.S. and Saudi Arabia has allowed to expire this past Sunday. So that was last week. The term petrodollar describes as the U.S. dollar or USD role as a currency used for crude oil transactions on the world market. It traces back to the early 1970s when the United States and Saudi Arabia struck a deal shortly after the U.S. went off the gold standard, and the agreement has had far reaching consequences of the global economy. The petrodollar agreement came about following the 1973 oil crisis. It stipulates that Saudi Arabia would price its oil exports exclusively in U.S. dollars and invest its surplus oil revenues into U.S. Treasury bonds. In exchange, the U.S. provided military support and protection to the kingdom. This held the U.S. cement its position as the world's reserve currency and ushered in a new era of prosperity for Americans as they enjoyed the benefits of being the preferred market for global corporations to sell their wares. Additionally, the inflow of foreign capital to the U.S. Treasury bond has supported low interest rates and robust bond markets. Uh, all is all that is set to change as Saudi Arabia is looking to move beyond an exclusive relationship with the U.S., as evidenced by Kingdom becoming one of the newest members of BRICS bloc. And so BRICS being the new global policy that is kind of shaping up with a lot of other countries. U.S. is currently not in BRICS, so I think that consists of Saudi Arabia, I think Russia, as well as some other countries are a part of BRICS, but it is based or backed on the gold standard, unlike the US dollar, which moved away from the gold standard around the 1970s. And so the only thing that was really used after that to float the US dollar was the petrodollar. So essentially, it's kind of saying that the US dollar is not really backed by anything at the current moment because the petrodollar was what it was backed by. That was a substitute to the gold standard. So ultimately, there's going to have to be some new U.S. policy that comes out to help back the dollar. As we know, we're still struggling with inflation. Last week talked about the inflation report. Inflation is continuing to grow. It did go down a little bit with the recent CPI numbers, which was fantastic for the market as a whole. But as Fed Jerome Powell mentioned, there would be only one rate cut this year before 2025. So it's only one rate cut, as well as basically destaking the dollar or depegging the dollar off of the oil standard, so no longer having a petrodollar. It's going to be a very interesting time for the U.S. as a whole as far as monetary policy is concerned. And this is something that affects everyone. So it's going to affect your banks, it's going to affect the price of oil, it's going to affect the price of all the goods, and it could potentially make inflation continue to go up. Everything that we use, whether it's, freight, um, getting shipments in, ships, all the supply or all the exports and imports basically are ran off oil. There's no fully electric vehicles that are out there that are doing this demand. The jets, the planes that are sending all the stuff out is going to be affected by this if oil prices start to skyrocket in the US and the demand for oil has not stopped. So definitely going to be very interesting overall. It's going to be a trickle down effect. In my personal opinion, it will be slow to begin with, and then it'll start to gradually increase until a resolution is made. So, definitely going to be looking to see how this affects the market as a whole. It may not be immediate, maybe some profit taking going on just for the uncertainty until the Fed comes out with potential news on a rate cut or increasing the amount of rate cuts from one to more than one as this policy has ended. But definitely very interesting overall. Next one we'll look at is ticker sign GLD, which is the SPDR gold shares. So usually in times like this, with gold being the standard that the BRICS is based off of, I could see gold potentially shooting up even higher than where it currently is. Now it is on a bearish downward trend at 215.73. Its moving average 10 is at 215.76. Moving average 20 is at 215.84. And moving average 30 is at 215.87. So ultimately, going to be looking to see how gold performs. If gold continues to go up and starts to skyrocket, maybe there may be some profit taking, people switching asset classes, going into something like gold, getting more physical gold, but that will ultimately help GLD start to go up even higher. So, going to be keeping my eye on this week for gold and SPY or GLD and SPY as the market continues to go on as this news is being digested. Next, we have ticker sign GME for GameStop. GameStop seems to be always in the news. Talked about GameStop in a short earlier this week, and then also talked about it last week a little bit. Roaring Kitty still making more headlines. I think I'm going to be looking to see how this performs overall. At the time of recording this, they're at $28.40, and there were some more updates from Roaring Kitty. So, Roaring Kitty sends a hidden message to GameStop CEO Ryan Cohen by raising his stake to $9 million a share. So, does Roaring Kitty have a grander plan than simply making a bunch of money with GameStop trades? He might be angling to exert actual influence over the brick and mortar retailer and ongoing transformation by demanding a seat on the board. So on last Thursday, the meme stock trader or Keith Gill himself posted an update on Reddit showing that he made 58 million so far since the first revealing his position with the company. And then also he released an update on his portfolio showing that he now has 9 million shares of the company, which I think is very impressive for an individual retail investor to have. And then also looking at the evidence of he wanted everyone to see, it appears that he has closed out his entire position by ending trading yesterday, liquidating his 79,990 contracts. So he had a bunch of call options that he um, got rid of. But he still managed to have 9,000 shares, which is an increase, or 9 million shares, which is an increase from the 5 million that he showed about 2 weeks ago. So I think overall, there's a lot of people that are following Roaring Kitty, following his positions. There's still a lot of people who have faith in GameStop. GameStop has a lot of cash on hand, so about $1.9 billion worth of cash on hand, which they can do a lot of things with. They have Ryan Cohen, who's become a board member, which I think is very interesting news. But I think the most positive thing they can do, in my personal opinion, is to make Keith Gill one of the board members. I think you'd see the stock shoot up tremendously after that, but it still is an ongoing developing story. So you have to bear in mind Keith Gill is a retail trader. And so even though he has brought a lot of hype and a lot of momentum to the GameStop um, organization and the stock itself, it still is up to the board themselves to initiate someone as a board seat or give someone a board seat, and then you have to have the shareholders vote on that. I don't doubt in my mind that if given the opportunity to elect Roaring Kitty as one of the board members and putting it to a shareholder vote, that all the shareholders would not vote to have Keith Gill himself be a board member of GameStop, especially with the massive position that he currently has. I think that that would be the best path forward for GameStop as a whole, but definitely going to be interested to see how it performs overall as the market continues to shape up. So I still keep a close eye out on GameStop as this news continues to develop. Next, we have Apple. Apple released their WWDC 2024 last week. Definitely a lot of things that were going on, a lot of controversial moves that were going on, being their partnership with OpenAI. It is very, complicated the way it's going to be working, but them releasing their Apple Intelligence, I think, is a good path forward for them. They had a lot of good developments, and it seems like they're geared towards implementing AI to their technology. So they're currently at $212.45 per share at the time of recording this. Moving average 10 is at 212.30. Moving average 20 is at 212.08. And moving average 30 is at 212.16. So overall, I would say they are bullish at the end of trading. They did have quite a swing. So jumping from 212.59 all the way down to 211.42 is quite a big swing. And then it bounced off of that 211.42 level to jump off to 212.49 where it ended the week. And so, going more into the partnership between OpenAI and uh, Apple themselves is OpenAI CEO Sam Altman attended Apple's annual developer conference this week. He walked on the campus, mingling with current and former executives, including Apple's co-founder Steve Wozniak. Nearly an hour later, the iPhone maker announced a much rumored partnership with OpenAI to bring its ChatGPT technology to devices later this year. But Altman, who's emerged as the poster child for generative AI in the 18 months since it launched its ChatGPT, was not featured in Apple's formal presentation, neither in person via a live stream, nor did he join Apple CEO Tim Cook on the other executives in a private press event about the privacy and security and the partnership between the two companies. And so this is something that I think is still developing. Earlier this week, Apple showed off a handful of AI powered features coming to iPhone, iPad, and Mac in the fall. And the majority of which are fueled by the company's own proprietary technology called Apple Intelligence. The company will offer OpenAI's viral ChatGPT tool in a limited capacity, usually only when Siri can be activated and needs more assistance answering inquiries. And the move to invite Altman to the announcement, but not to have him appear before the public, also represents, in some ways, how Apple is cautiously moving forward with the partnership with OpenAI, along with other AI companies, continues to face concerns from researchers, industry experts, and government officials around misinformation, bias, copyright, privacy, security, and more. The deal also comes at a time when the industry is moving quickly and the government regulators, companies, and consumers are still finding out how to engage with technology responsibly. Apple hopes to push big hopes that the big push into AI could spur growth in iPhone sales and devices without a major upgrade for years, and users are now waiting longer to upgrade their devices as a result. An uncertain economic environment is also weighs into customers, particularly in China. So I think overall, for analysis of Apple's standpoint, I think it is a big move to move into AI. You got to do it correctly. One company that I think did not do it correctly is Adobe. Adobe moved into AI. They had their AI assistant, but people were starting to learn that you had to sign an agreement which allowed Adobe to be able to take all the data, so all the presentations that you personally worked on, as part of their learning algorithm for their model, which kind of was a data breach issue. I think having people who have the background to understand the security aspect of AI and where the data is going and how it's being used is going to be incremental into implementing AI to the future and having people feel secure about using it. Ultimately, people don't want their data everywhere. They don't want it to be used or accessed by everyone else, which can bring security concerns. So I think once they can tackle that, getting the right players or the key components in place, I think having all of those in line, as well as some governance around what you can or can't do in these AI models, will help companies to grow moving forward. So I think Apple's moving in the right direction. I think the market is kind of too new to really be throwing out solidified partnerships. I think it's going to have to do a trial period, meaning I think they want to release it slowly, especially with a company like Apple. They have a huge um, consumer base as well as a huge investor base. And so, looking at the investor base, having things that could bring potential security issues could definitely, lose both. You could lose investors and you could lose people who are looking for your products. But AI is something that people are asking for. So, I think it's kind of a uh, give and take. But I think slowly is the best way to do it. So I think not having Sam Altman in a lot of those conferences or a lot of those press releases was a good decision. But having him there present to kind of debut it was kind of a good move, showing, hey, we're thinking about the partnership. Hey, shareholders, we're thinking about moving forward with AI. And we kind of have the best of the best, Sam Altman, who is the CEO of OpenAI, here to witness what we're trying to do. So I think it's a good partnership as long as they can figure out what to do with the data or how to secure people's data. There's no better person to try to figure that out than Sam Altman, who is ChatGPT, has the best product on the market. And so I think a slow partnership, building, figuring out what the governance is, having the right key members, maybe some people from NSA potentially joining the team, some cybersecurity experts, people who really know how to secure data and the benefits and kind of the nefarious things you can do with AI, trying to mitigate the bad actors in the AI space and make it something available where everyone can enjoy it for their personal use. Those are things that take a lot of time. So I think it's kind of a good move for them to say, hey, we're thinking about that, but it's going to be a process because there's so many other things we have to factor into a place so that we can keep the ultimate consumer safe as well as the investors happy with the rollout. And so, lastly, we want to talk about Microsoft. Microsoft's going to be the last one on my list. They are bullish. Moving average 10 at the time of recording this is at 442.06. Moving average 20 is at 442.02. And the moving average 30 is at 442.03. They ended the week at 442.45, so well above the moving average 10, 20, and 30. And had a little bit of a bullish upward trend towards the end of trading. Some news that's going on with Microsoft that I think may change this from bullish to bearish potentially is Microsoft is going to be delaying the launch of AI recall tool due to some security concerns. So the fact that they're looking at the security concerns for AI, like I said earlier, is something that a lot of companies are trying to pivot to. You don't want to release something too early and have a security breach. That is definitely going to be a black eye for your company as a whole. But you also want to be able to release it after stress testing it. So I think if companies can release small updates or incremental updates and not succumb to market pressures or pressures from a lot of consumers who are like, well, I can use this, I need this availability for my device. And if they can wait until the product is, actually solidified, I think it will help everyone overall. So Microsoft will no longer ship Recall, an artificial intelligence tool that tracks user activity. When the company released the Copilot Plus PC next week, it announced on a blog post on last Thursday, following concerns about privacy and security. The company wrote Recall will shift from being a broadly available tool to preview future availability only through the Windows Insider Program, or WIP. When the new computer is released on June 18th, Microsoft plans to make the AI feature available on all Copilot Plus PCs soon after they receive feedback through WIP. And so, a release from the VP of Windows said the decision is rooted in our commitment to providing a trusted, secure, and robust experience for all customers. Microsoft first introduced the Copilot Plus PC on May 20th as Consumer Digest to run advanced AI programs, including Recall. Recall is an AI tool that regularly takes screenshots to create and record a record of activity, allowing users to research from their previous actions. Recall became a source of controversy soon after the announcement. Industry experts have expressed concerns about their potential for hackers to develop tools that can retrieve user information, including usernames and passwords. In response to the backlash, Microsoft initially announced that the recall feature would be turned off by default, requiring users to opt in, and the company also implemented additional security precautions, including an encrypted search database to require all recall users to uh, enroll in Windows Hello, which has users provide their identity through PIN, fingerprint, or facial recognition. Microsoft's decision to delay recall allows heightened concerns around security of AI field involves rapid as the AI field involves rapidly. Last month, the U.S. government review board criticized the company's handling of China's breach of U.S. government officials' email accounts. So, like I said earlier, companies that are quick to release the AI tools without really understanding how they're implemented into the world and what they can access, you're just going to have more time to stress test a lot of these, and it may be a lot of companies putting aside a bunch of money into R&D. So you know Apple, I think, has the cash on hand to just build a whole new R&D department or to beef the budget for R&D. And I do like the fact that they're slowly releasing these. It seems like Microsoft is kind of rushing to release a lot of these products that are not completely secure. But I do understand, it is a competitive market out there. You want to have the best tool out the first, but I think R&D is where you're going to win in the end. I think having a good R&D department where you can go and stress test a lot of these things that are going out in the market will definitely help overall, and consumers will be a lot happier with the product that comes out, knowing that their data is safe and that there's no breaches. And so I think anybody can rally around that. But having a large R&D department, whether you're hiring people up to do the R&D or you're just having people stress test, making sure that it's secure, and then rolling out small incremental changes to updating that software to where it's locked down and more security features to make sure everyone's safe will help you overall. So to me, it's really a race between Apple and Microsoft, both really pulling on Sam Altman and ChatGPT and all the features that it has. ChatGPT really has shown what the use case or the power of you know AI is and how it can help you overall. But I think if companies are not too thirsty to try to release these products and are actually doing research, whatever company comes out with a product that really checks all the boxes, I think will help overall. So for me, if I was in the position of Apple or Microsoft, I would spend tons of money on R&D, and then have little demonstrations, sort of like the WWDC or having small demonstrations on just even YouTube itself, explaining some of the features that are there, and then getting market feedback. Some of the features that are released, people may not even need or want, but if you release some features out there, take an analysis of some of the features that are available after you get your R&D department to go out there, then just slowly release them as they come out after you have stress test them and put them through R&D. So drop a comment down below. Tell me which stocks do you think will have the best week this week. Again, like I said, it's a short week of trading. You're going to be looking at GameStop as well, Apple, Microsoft, GLD, which is SPDR Gold Shares, SPY, which is SP 500, and Kroger for its earnings coming up this week. Good luck to everybody out there trading, and I'll see you guys on the next one. Peace.